Thank you so much for joining us today. Jubelah, let's very quickly just check in on the market performance for this week. The Zim Industrial Index up by 3.8%, total turnover coming in, a strong turnover in fact, coming in at $7 million versus 2.8 million in the previous week. Run us through the big gainers of the week, spurring the gains in the industrial index.
Yeah, Samantha, we have had a very good week here, I would say, I think, for a change. The index, as you say, up almost 4%, spared only, by gains in Delta, Insco, and the Insco-related subsidiaries. And, total turnover more than doubling to 7 million from 3 million in the previous week. And I think if one has to look at it very closely, it's really been an issue of two halves. I think from Monday to about Wednesday, I think we saw, both volumes and value traded increasing, very, very significantly, particularly in the blue chips. Specifically in Delta, I think one important thing that people must understand is that Delta is about 20% of total market cap. So any increase in Delta share price is likely to have a very, very significant, impact on the overall market. But I think on Thursday and today, we saw a significant number of buyers exiting the market, and even both volumes and prices actually weakening.
I mean, from the results that we've seen from consumer-related or consumer-facing companies, what is your assessment of the health of the consumer right now?
I think if you look at during the week, we saw results by Insco and other Insco-related and listed subsidiaries. I think just focusing on Insco, which is one of the blue chips stocks on the market, running a conglomerate of fast foods, household durables, retail through the Spar brand, that is, and a variety of consumer items. I think what is being realized here is that consumer spend continues to increase. We are seeing that in many other subsectors. I think in breweries, food retail, cars on the road, cement volumes, you name it. I think we've seen an increase of about 25% year on year. And, there is actually enough vehicles on the ZSE to actually capture that. But back to the Insco, performance, I think, bottom line up 21%, EBITDA very strong at 44%. Obviously, there's been very, very strong, contribution by, high margin businesses, particularly in the fast food and household, durables. So when you really look at it, there's been a dividend of 1 cent that has been given. The counter is now trading at about 8 times earnings. So you've got, a dividend yield of 3%, and you could actually match local consumer inflation on dividends alone, because consumer inflation is about 3.9%. So a dividend yield of 3% is very, very, healthy. But I think what is encouraging also is that there is a significant amount of money that has gone into capex in order to actually buttress and support, future growth. And, we're seeing very significant portfolio, optimization to just put a lead on leakages. I think they had lost a significant amount of money last year in their retail. Yeah. And also strategic supplies have been secured. We continue to see very strong, foot traffic at the food, outlets. Now they're averaging about 3 million, people per month, visiting their if we were to look at,
by all indications, I mean, it doesn't really seem to be much that you should be concerned about. I mean, they're putting capex into growth projects. They're managing to turn top-line growth into even better bottom-line growth, and it's trading at a discount. But are there any areas that you'd be concerned about right now?
I think there's obviously the market-wide and the systemic issues that, one has to look at. We are seeing very strong fundamentals from the companies themselves. But when you really look at the systemic issues, which are the broad market issues, you start looking at concerns over elections. I think right now there's a bit of haggling going on about this whole constitution-making process and all that. Regulatory environment continues to be very, very unfriendly. The liquidity issues in the market. And also one issue that, that we've been seeing playing itself out in the market has been the fact that there is competing alternative classes, asset classes in the market, particularly the fixed income securities market, and one could actually achieve positive real returns from investing in the money market. You're looking at, average yields of about, between 8 to about 12%. Inflation in the meantime is about 4%. So you've got a very healthy, consumption improvement on your dollar.
And of course, are you seeing strong appetite coming through from foreigners, or what's driving the bond markets at this point?
I think foreign participation has been very weak. If you look at going back to 2009, 2010, up to about 2011, we had been seeing almost 60 to about 70% participation of the total turnover really being driven by foreigners. But that has really slowed down to, sub 30%, and it's obviously an issue of concern. And as I've said, the real issues which are coming in the way of, foreign interest has really been, regulatory environment and particularly the issues surrounding, the political question.
But overall, though, I mean, when you see results coming through from the likes of a blue chip like InScore, it does give you some reason to be confident that things are turning around. Where would you be putting your money right now? I mean, is it still in the blue chips? Any stocks specifically at this point that you think are surefire bets for capital appreciation, or at least, I suppose, good dividend payouts?
Well, I wouldn't want to really be giving away too much on strategy. It's really proprietary. But, obviously, consumer spend, if you are seeking safety, if you are really trying to run a very, very conservative portfolio strategy, you really have to be looking at, the blue chip. That's where we see most of the safety coming from.
Thank you so much for joining us today, Jubelah Magutakuona, Senior Fund Manager at BancABC, of course, running us through what's been taking place on the Zimbabwe front, and also just looking at some of the things that have concerned investors and continue to concern investors. It's uncertainty over elections, uncertainty over the regulatory environment, and of course, low liquidity in the market. But I mean, very good results coming through from the likes of InScore, as he said. Top line growth 21%, bottom line growth or operating growth 44% for that company.